With all the talk on investing, pensions, tax wrappers, and other financial jargon, do you ever feel like you're falling behind in the money department? Have the fear-mongers given you a vision of the future you with not enough money to retire on? Do you have nightmares of yourself being a bag lady or wandering the streets begging? Well, you are not alone. And in this video, we're going to take a look at the key questions to answer to get you on your investing journey. Hi there, welcome to my channel. Let's talk money and having more of it. I can quite honestly say I had absolutely no clue how to invest for myself. And this is despite working in an investment bank for many years investing. But when it comes down to our own money, it's personal. Not to mention how hard all the personal finance jargon is to understand. But I wanted to change my financial story, and I see firsthand in my day job that investing is rocket fuel to do that. Armed with the will to learn, I found out what I needed to know to get started investing. And these are the key questions that I discovered you need to answer to get you on that journey. The first question to answer is, why do you want to invest? Do you want to build up assets for retirement, to save for a deposit on a house, to go on that holiday of a lifetime, to build a college fund for kids? It's important to be clear on what the purpose is because this will be a big driver of what to invest in. Choosing to invest because everyone else is investing and you don't want to get left behind is certainly a driver, but without having a clear goal to work towards, are you going to stick with it over the long term? How long will you be investing for is question number 2. Knowing your why is the first question, as this helps to know the time frame for investing. If you're going to need the money in the next 1 to 5 years, a savings account may be the best option. A fixed term deposit where you cannot access your cash for a set period works between 2 to 5 years as well. Longer term plans lend themselves to investing in the stock market, as it gives your investments the time to ride out the ups and downs that the stock market will inevitably go on, as well as providing you with the magical benefit of the power of compounding over time. Question number 3 is, how much do you have available to invest each month? The old saying, spend what is left after you save, is a great slogan. There's no point, however, in saving if you're going to have to go into debt to actually live. Make a conscious spending plan and identify what amount you need to pay your necessities and your debt, and of course to set up an emergency fund to cover those necessities for at least 6 months, so that when you have identified the money you have left over each month to invest, you know for certain you're not going to need that money in an emergency and you can quite comfortably put it away for the long term. Question number 4 is, what is your risk tolerance? Does the thrill of the roller coaster ride get your adrenaline flowing? Or are you more of a 2 feet on the ground kind of girl? Market ups and downs go hand in hand with investing, and not knowing your risk tolerance could mean you might lose your nerve and pull out your investments at the wrong time, losing money. So it's very important that you have clear self-awareness around what level of risk sits comfortably with you. And once you know this, you can more effectively choose the investments to suit your risk profile. What is also important to consider is your stage in life and the amount of time you have to recover from any financial losses on your investments. The bottom line, though, to always consider is your investments should not give you sleepless nights. Are you maximizing your money is question number 5. Would you reject an offer for free money? Who is offering free money, you probably are asking? Well, let me tell you, the government is. The government wants to incentivize you to save for your retirement, and they offer you tax beneficial vehicles such as a workplace pension, your personal pension, individual savings accounts, or any other accounts that you have in your country that provide tax benefits for you to invest. Your most savvy investment is to take advantage of them. Don't look a gift horse in the mouth. Not much in life comes for free. Question number 6 is, what other investments do you have? You're probably familiar with the investment adage, don't put all your eggs into one basket. And it's important that your investments are spread over various asset classes that respond differently to negative movements in the markets, in the economy, or in interest rate changes. Diversity. In stocks and bonds, as in much else, there is safety in numbers, according to one of the most famous investors, Sir John Templeton. Think about all the assets you hold and plan your investments to get a good balance between the various asset classes. Question number 7 is, how much can you grow your monthly investment by? You want your money to work for you, and many of us haven't been leading our money to do so, and as a result, it has been running around a bit loosely. In question number 3, we track down our money to make sure we are maximizing what we currently have. Ideally, though, you want to aim to invest at least 20% of your income a month into your retirement and other investment accounts. So if you don't have 20% available when you start, that doesn't matter. Don't let that stop you from taking action. Start with the small amount that you can afford to put in and set a target plan to grow that amount. And one way of doing that is to plan to put any salary increases you have directly into your investments, because you've obviously got used to living on your old salary, so anything incremental you could put away, or identify where you could really cut down on those expenses that you have going on each month, or as an option, try and find alternative sources of income as well. The last question to ask is, have you made consistent investing as simple as possible? A key to getting started is to use the KISS strategy, which is to keep it simple and straightforward. With literally thousands of managed and passive funds to invest in, not to mention all the individual shares and bonds, where is a goal to start investing? And the short answer is to select the cheapest, simplest, and most straightforward option as a starting point. And an index tracker fund meets this definition. Warren Buffett, arguably the most successful investor of all times, has been quoted as saying, "By investing periodically in an index fund, the know-nothing investor can actually outperform most investment professionals." An index tracker fund invests in all the assets making up its selected benchmark index. For example, a tracker fund tracking the FTSE 100, which is an index of the top 100 shares in the UK, will invest a small amount in each of these companies to match its benchmark index. This is a passive fund, as there is no human managerial involvement, and as a result, it should have a lower cost, which typically can mean a higher return for the investor. The beauty of investing in index tracker funds is that you only need a small, manageable monthly amount to invest in these funds, and this can be further simplified by setting up a monthly debit order to put your small amount into your investment. It's simple and it's straightforward. Now, the real trick to success in investing is to get started as soon as possible. And by answering these questions, you will empower yourself to take that first step in investing, because you will know why you're investing, for how long you're investing, and how much you have available to invest. So if you're ready to get started investing, grab the Investing 101 How to Get Started Investing Guide below. If you like this video, please let me know by liking it. Share it with any other ladies who are ready to change their financial story. And if you found anything helpful, please comment. For financial education or money talk designed for women, please subscribe to my channel. It's been great speaking to you.